Hi, everyone. Thanks for joining us. My name is Jennifer Burns. I'm the head of the Business Insight Center here at the Central Library of Rochester in Monroe County. Thanks for joining us on this lovely fall day. Today, we're going to talk about year-end tax planning. Yeah, nobody likes to do it, but you know, and the sooner you start, probably the less painful it'll be when it's January. So Tim Bach from the Small Business Development Center is going to introduce our speakers. Tim, take it away.
Okay, good morning, everybody. Welcome. My name's Tim Bach. I'm a business advisor with the Small Business Development Center here in downtown Rochester. There's about 23 small business development centers in New York State. About half are down by New York City, about the other half spread throughout the rest of the state. There's SBDCs in all 50 states. We work with a variety of small businesses, either people that are starting, managing, growing, or even purchasing a business. So we work with quite a variety of businesses. I have an accounting background, a CPA background, went to RIT for accounting way back when, but I was never really a tax specialist. So we've brought in today a couple of CPAs from Allied Financial Partners, Linda Wiener and Jessica Drachler, who will be presenting. If you would like to set up an appointment with us at the SBDC, our phone number is 395-8410, or our website, www.nysbdc.org. You can go there to set up an appointment as well. So without any further ado, I'd like to turn it over to Linda and Jessica. Thank you.
Okay, thanks, Tim. Welcome, everybody. We're going to get started, but we really welcome questions as we go along so that we can keep current with the piece that we're talking about. So I'm Linda Wiener.
I'm Jessica Drachler.
We're both CPAs. As Tim had said, we work with Allied Financial Partners. A little bit about our firm. We have 5 different locations across the state. We have 21 CPAs as of right now on staff, and that's growing, and 65 employees, and that's growing also. We've got 3 certified financial planners that provide financial services, benefits, insurance. We have a payroll company, so we like to think that we're a one place you can shop for all of your needs. We work with a lot of small businesses, and it's really convenient when we're doing all 3 services for them, especially if they're running payroll and then they want to set up a 401k, or even if they're a sole entity and they want to do their own retirement. It works well. We're able to communicate across all 3 entities, and that allows us to kind of act quickly on things. We also provide financial audits for both not-for-profit and for-profit entities, and some government entities. All right, so we're here today to talk about finishing up 2021. We're going to be back again to talk about getting started out in the new year. I understand that you guys spent some time learning about QuickBooks, so we stayed away from that, which we have not done in the past. We usually talk about it. So if we get into something or mention something you don't understand, again, please ask a question, because we're assuming that perhaps maybe you know some things and you may not. Anyway, Jessica's going to jump in here a little bit too. So basically, tidying up the books at tax year end. So we run down the balance sheet, and some of you may not have a balance sheet. If you did your QuickBooks, you understand that a balance sheet is a place in time. It tells you what you own, what you owe, and the net of those two. So we want to talk just a few minutes about reconciling certain accounts, whether you have a balance sheet or not, and what we do. You want to talk through some of these?
Oh, sure. So essentially the most important one to keep on track is your cash and credit card accounts. You want to make sure that you're reconciling those, preferably each month. We have a few clients that tend to do it, all in January and try to rush through it. But if you keep track of those, when you look at your balance sheet, you'll be able to see, you should make, your cash should match what is in your bank account, outside of a few outstanding items. And some of our clients that I just mentioned that wait till the year end, get themselves into some trouble sometimes when they don't keep track of these things. They don't reconcile each month. I had a client who waited until they were an S Corp, so their return is due, March 15th. They finally get us their books, like the first week of March, but they couldn't reconcile. They were having a ton of issues, and they didn't, reach out beforehand. They had all these transfers, like, coming in and out of, they had 5 different bank accounts. They're transferring money back and forth, and, it took us over a week just to clean up their accounts, get their cash reconciled, get all the information we needed from the bank. We needed statements for all 5 of those accounts. And then, they wanted their return done by the 15th, but they just didn't give us enough time. They ended up going on an extension, and, that happens if you don't keep up with things like this.
And it costs you more money, as Jessica said, we spend a week on something that should take us less than an hour. So if you're having a trouble with cash, then you could be having trouble with a lot of other things. And this is where I like to ask, but I don't need to know. If people tend to reconcile their own personal bank accounts, then they're going to reconcile the business. And if you don't do either, you really should take a look, because the banks make mistakes. We find a lot of mistakes. And a lot of people don't reconcile their cash with the bank any longer, or the credit cards. And I think that's a big mistake. Again, if you're not a sole proprietor filing a Schedule C or a Schedule F or an E on your tax return, you are going to have a balance sheet to go with your partnership or your S Corp. The other things on the balance sheet that we like to look at, you might have inventory. Not too many businesses do, but you really need to count that inventory right at year end, or pretty close to it. And we need to make an adjustment to adjust inventory to cost of goods sold. You've got to look at your receivables. Who owes you money? And are they real? Are you going to collect? If you're not, then decide to write them off at this point. Because depending on the type of business, whether you're accrual or cash, and hopefully they talked about that when you did your QuickBooks training and your accounting training, you may be reporting those receivables as income, and then later on they're not going to be collectible, and you take them off of income. So you might want to do that this year. Another big one is if you bought any equipment. We'll get into equipment in a little bit, but I think we have a slide on that. Anyway, we need to add your equipment to fixed assets if it's over a certain amount, and we usually talk with our clients about what we're going to add and not add. Typically, big machines, repairs on your building, big things will count as fixed assets. Sometimes a small computer isn't going to count, or we'll put it on and we're able to write it off. We usually make those decisions with our client. We don't leave it up to them to make decisions what are fixed assets and what is the depreciation on them. Depreciation is an expense you get to write off, but it's not a cash expense. You are depreciating your equipment, and the value is going down every year for the life of that equipment, and the IRS tells you what the life will be, basically a table. On the other side, there's things you owe, and those are things like a bank loan. Some people have 2 or 3 bank loans. They might have a line of credit. We need the bank statements for those. We reconcile those to the bank and your books. And also if there's any loans to the owner, and any bills that you owe. And again, I ask you to look through your bills, and if there's bills that you don't owe, get them off the books as an expense. Or if you do owe them and your bills are a lot higher than the cash and everything else, we're going to talk to you about what you're doing in the future to see if you can survive the business. And then the net is the owner's equity, and that's just the net of the difference between the assets and the liabilities. And that I don't expect people to understand at this point, but I do like to make sure if they're posting in QuickBooks, that they're posting proper things in proper accounts.
Going back to the payables real quick, something I find a lot with my clients is that they end up entering like an invoice twice, or they didn't apply a payment to the correct invoice, so it's already paid, but, it, you know, it doesn't show that on the books. It's very important to go through like what you owe and make sure you are catching things that are like that.
Run a payables report. If you see any negatives in there, that's a sign that something didn't get applied right. Or if you see something where you got a positive and a negative for the same amount, then that didn't get applied. So I'm working right now with a client who's got a year-end audit, and the auditors are there, and that's the big thing that I look at, because they're going to be dinged if they didn't put it in the right period, and they're going to be dinged if they didn't apply it properly. And QuickBooks can very quickly help you have a mess. So if you don't know how to apply it, talk to your accountant, get some help with that. QuickBooks is friendly, but it's very easy to go way off board, and then when we get the books and we've got to clean up those messes, that 1 week for the cash, think about another whole week for everything else, or two, and you're into a pretty big tax bill. Other things that you want to do is, if you're in QuickBooks, this would be great, because you can run a compare to the prior year for the same period. If something looks really different, ask yourself why. It's a great task to do regularly anyway, like year-to-date compared to year-to-date last year. So if your income is way up, you know why. If it's way down, you should know why. If certain costs are up, did you post stuff in the right place or the wrong place? Or maybe you just know, and for a lot of my clients we were seeing, that I'm talking to now, who's starting to do tax planning, we're seeing increases because of the COVID impact kind of going away, and so they're coming back. And so tax planning this year is becoming very important, because they're probably going to have more income than they did last year. And last thing, if you're a business, or if it's on your personal return, we provide tax organizers to all of our clients. The businesses get organizers, and the individuals get organizers. Some people don't like to fill them out, and they do their own little sheets of paper. And I'm going to tell you, that organizer is really helpful to us and saves time. So if you want to cut your costs for doing your tax prep, fill in the organizer. And if you're with a company like ours, there's some others that do this, you can get an organizer online, and you can fill it in online, and when it gets to us, we're going to be at a point where we can upload that data once we've checked it and made sure that it's correct. Again, all things that we can do to save time, and most of us bill by the hour. Okay. Any questions there? All right. So, at year end, 2020, 2021, 2020, if you have a business, hopefully your accountant gave you journal entries to make in your books. Or they came and made those entries, or if you're online, they made the entries online. I've been working with Jessica now a few years, and I've encouraged her, because I do this. For my big clients, I go out and make the entries, and I clean up the books while I'm there, because they've already started the new year, and I want to make sure they're getting off on the right foot. I also, online, I'll make the entries, and if I have to make a lot that they may not understand, I may have them walk through with me, or I'll tell them what I did. Or some people do make the entries, and then we just check the books. So make sure you make those entries, because if you don't,
Yes, more time for us, and would cost you more money.
Yep.
I have some clients that are really good, and they contact us like as soon as they receive their final return. They receive a copy of it, they notice that there were some changes, and they ask us for the adjusting entries. I find it more common that people ask me right about this time for the next 2 months. I'll probably get at least one email a day asking for the adjusting entries from the prior year, because they're trying to, get their books to match for us for 2021.
And what happens if we're doing them this time of year? I know I've got 2 clients I'm going to make their journal entries, and they made changes in their book at year end after they gave them to me. So I've got to clean up all that and get it to agree to what we told the IRS. And that means that we're gonna make some entries to move stuff into the current year, or they might have deleted something we have to put in, we'll have to delete it in this year. So one of the things that you can do, if you're using QuickBooks or any other accounting software, there's a place where you can set a password to close the year. And I do that with all of my clients. I set the closing date, and then I use a password that's called Linda. And a little story about that, I was at a client for the person I used to work for, Fran, he's with our firm now. And I went to one of his clients right away when I got there, and I went down and I was trying to make the entries, and I said, I need to know what your closing password is, and they kept saying, call Fran. So I said, well, Fran's not in the office, and finally that's the password. And the thing is, if you are going to make entries in a closed year, I like to use that password because it warns you, it'll come up, and then you say, oh, I better call Linda and ask about making this change before I make it, okay? Some people use a
Ladies,
date.
we have a question. Is there a general organizer that you recommend that people use?
For taxes?
Terry, is that for taxes?
Each firm usually issues their organizers based on the prior year's tax
From
return.
the previous slide she's talking about.
Okay. Request business organizer, a list of items needed by your accountant. Yeah, your accountant, if they did your taxes the year before, can run an organizer. We run those for all of our clients, and we'll be doing that in January early. And they'll get mailed or emailed or gone through the portal for people to use. If you're brand new with us, people usually kind of contact us now or early January. We're gonna want to see the prior year return. We're going to most likely get that return into our books, and then we're gonna issue an organizer. Some cases, people get the stuff to us so late, we can't give you an organizer. We're rushing to get that return done. But your accountant should have a business organizer, a tax organizer, okay, for you, for this year. And I would say if you don't see something by mid-January, make a phone call and find out. If you, for our clients, you might see on Facebook or on our website, look for your organizer, or we'll send a little thing out that tells you it's coming. We might send an email blast.
Yeah, for like a general one, like if maybe you do your own taxes, or you didn't, you haven't found an accountant that you like yet, you can probably find a checklist on one of the, like the more popular, kind of do-it-yourself sites, maybe H&R Block or TurboTax, might have like a decent checklist for you to kind of go through and see if you're missing anything.
Okay, hope that answered the question. If not, throw something else up there. Okay, on to what starts to happen early January, and this is Jessica's favorite thing. She's been in charge of this for the last few years.
Hopefully not this year.
Hopefully not, but I think Jessica and I are going to end up getting dragged into it. At the end of January, on the 30th or whatever day, we're sitting there reconciling everything we loaded up to the software, to the data that we have. But, you want to talk a little bit about 1099?
Yeah, we can do 1099. So 1099s are due, January 31st here. They're for vendors that provided you a service that you've paid over $600. That's if they're not a corporation. It includes attorneys. So some examples are, a lot of the ones that I see are for rent are big ones, or different services, like, Joe from down the street has like a painting company. It's just a simple Schedule C. He's not incorporated or anything like that. That's a lot of what I get in my clients, is they, have vendors like that.
You might have somebody who's doing computer work for you.
Oh, computer, yeah.
So the thing to do, there's a form called a W-9. You can go to the IRS website, www.irs.gov, and look up W-9. Grab that form and send it, give one to every vendor, unless you really know they're a corporation. Some people might put Inc. or Corp or something, or CO in their name, and they're not an S Corp, they're not a C Corp, and they need a 1099. And send it out and get it back. What I do with my clients that I'm working with, I tell them don't pay the bill till they fill out the W-9. I have a big company that does venues, and they use caterers that are individuals, and they pay them a lot of money. Or they have people come in doing cleaning and stuff like that, and I tell them, do not pay the bill till you get the W-9, and do not work with them if they won't give you one. Why do we tell you to do this, okay? The fines if you don't do it are stiff if you get caught. So it can be up to $500, and it might be more now per missed 1099, and a late filing fee if you file after January 31. I think there's fines then would be placed on the person who, on the other end too. So why does this happen? So the guy down the street, you know, he fixes things and he comes in and fixes something, he charges you $50. Okay, you know, you're not gonna give him the 1099. He's probably not gonna report that income. He probably should if he's doing it for a lot of people, but that's not on you. So the guy charges you.
Can we ask a question
Go ahead.
quick? Murray wants to know if they're an LLC, do they have to give them a 1099?
We don't know. That's why I want you to give them a W-9, and if they check the box that they're a corporation, then, if they check the right box, then you're covered. And the reason is, if you assume that they don't need one, and they get audited by the IRS, and they have no 1099s, and they see that the IRS sees they did business with you, where do you think the IRS is going next? Now they're gonna audit you, and they're gonna find out you're not issuing 1099s, and you have, let's say you have 10 clients that should get them. There's $5,000 worth of penalties that you're gonna find, and who knows what else they're gonna tack on, and who knows if, because like last year, we don't even know the tax laws for this year.
So, I mean, you're saying do a W-9 first, and then depending on if they say I'm a corporation, then yes, do a 1099.
No, if they're a corporation, you don't. But they could have put LLC in their name and they're not an LLC, okay? They could be a DBA. You know, so don't take those chances. And keep those W-9s, because if you got audited, you can show all the W-9s. Now, what happens if you give somebody a W-9 and they don't fill it out and you paid them? You know, you're a good sport, you're gonna pay them, but, you know, they'll give me a W-9, and they don't. And you don't know, so you can't issue them a 1099 if you don't know the tax ID number for the business, or if it's an individual, their social security, their mailing address, the actual name of their company. You can't issue it. But the IRS catches up with them, then they catch up with you, and you get dinged. If they won't give you one, and you've got proof that you sent it to them, and they didn't respond, you're out, you don't get fined, okay? So I have my clients keep all of those. Send the W-9, keep a copy right on there when you sent it. When you get one back, throw out that piece. Or if you're getting them electronically, then just keep notes. And a good file.
Yeah, I was gonna say, I had a few clients that, for some reason, some people just don't wanna give you that information, probably because they don't want the 1099, so they have to report the income. But I always make sure that I keep notes for anyone that I reach out, for any clients that I do. These are typically for the clients that wait until January to get this information around. I really recommend doing the W-9 throughout the entire year as soon as you get a new vendor. So hopefully you don't run into these issues come, you know, the last week of January when these are due. But if you do reach out and they won't give you anything, make sure you do note, like when you reached out, that they wouldn't give you the information to save you from these fines. I didn't see anything about a new updated fine number, but I imagine it hasn't gone down, it's just gone up, so.
Just, this is really important, and it's important to get on it right now, because we have people, you know, first few weeks of January, we've got great people who will give us their stuff then, and we can get started. And actually, we're really slow at that point in time. And what happens is we get into January, we start getting tax stuff. And then people that last minute send us their 1099s. you know, we're not talking one or two. We have some farms that might get 20, 30. And we've got to type all that stuff into our software if we don't already have the information. And we've got to reconcile it all. And Jessica and I have been doing that for the last 3 years together. And it's pretty hectic that last minute getting it all right. And we've got to file it on time so that you don't get any fines. So just do this regularly. Have those W-9s available, email it out, say, please send back. And if they won't give you one, decide if you're going to do business with them. Okay. Next thing. I don't know how many of you are running payroll, but if you are, your payroll company should be handling your quarterlies. Hopefully you're not doing payroll yourself. If you are, I really would highly recommend getting somebody to do the payroll. I have too much bad experience with people who decided to do their own payroll, and when they finally came over, we're figuring out how to get them out of fines and penalties because they don't know how to do their returns properly. And I will admit that I don't even want to touch a payroll processing or payroll returns. I give them to our payroll company. They do them. We don't touch them. Your accountant will need copies of your year-end payroll reports and the W-2s that you issue. Keep that in mind and just give them a copy. Don't wait for them to ask. By the time they ask, they're into your books. Now they got to put it aside and wait for you to give them that. And every time one of us is working on something, we put it down and pick it up days later. We spend time remembering where we were. We want to keep going. So you want us to save money on doing your returns? Get us everything that we need. So remember that we're going to need this, or give us access to get into the payroll company report.
Yeah, I think, this is like the biggest set of information I have from clients who don't provide their pay reports, even though I do their taxes every year. They like never give them to me, and I know that they didn't necessarily record them properly in their books either, so I know that I need them, and it's always a hassle to get them.
Yeah, people tend to report the net pay into the book, and you really need to report the gross pay. That's your expense. So they're cutting, if you're doing your own taxes in your own book, you're missing out on a whole big expense, because net pay is after the employees pay their own tax. So you get to take the gross pay, you get to take the payroll taxes that you paid, and any benefits that you paid for the employees are all expenses you can write off on your books. So again, if you're doing this yourself, make sure you're doing it right.
Yeah.
All right.
Your accountant, I know we help I mean, if you use our payroll system, we actually set up a journal entry for you to either import into your QuickBooks, or you can, print it out so you can type it in yourself, depending on what you're using. But I had a few calls that use other payroll companies, and I help them out once in a while. If they have something new come up, we help them get it set up and, figured out so it's correct going forward.
One of the things with our payroll company, one of the options you have would be, I don't know if it's $2 a pay period, they'll post your journal entry in QuickBooks if you're using QuickBooks Online. And that's kind of nice because, you don't have to worry about it. It just gets posted. And we get to look at it as we need it if you're QuickBooks Online, because then usually that's shared with us and we can go in and look at things regularly if you're having a problem. Okay. Getting on to tax planning. That's where we are right now. We're starting to get calls, people need to do a tax plan. Who needs to do tax plans? I just want to go over that, and I don't have a slide here for that, but maybe I do. People who need to do tax plans are people who have businesses, especially if it's a new business and you have no idea what you're going to owe for taxes next year, and you didn't know that this business would look like it does at the end of the year, so you might be making a lot more money than you thought. You may not have paid enough taxes. If you're a business, usually we'll do a tax plan. If you're an individual who has investments, investments might have done really well, or you're new retiring, and you're going to have, you may have part-year payroll, part-year retirement money. We do a lot of tax planning for those types of things. So know where you are and how much you will owe is very important, because if you don't pay enough throughout the year, like each quarter, you will get fined for underpayment penalties. They're not a lot of money, and you could get late fees, and depending on when you end up paying it, which might be April 15th, then it just keeps tacking on interest, the penalties keep tacking on, and there's interest. So we like to do tax planning, and sometimes at the end of the year, we'll get a surprise from a person and their business did really well, so we'll make them make a big payment on the January 15th estimate, or maybe in December. Or we may say don't make anything. I have some people that don't like to pay estimates. The penalties and fines they feel are okay, and they'll pay it. But you could be talking $600–700, and if you can afford to pay that, then that's your business. But most of our small businesses need every penny they can get.
Mhm.
So other things that we do when we do tax planning, let's say that I have a business I saw yesterday, and their income is up significantly over last year. And they said, what can we do? And the first question they said, can we hold on billing? And I didn't answer. I said, I can't tell you to do that, and I can't. Holding on billing, if you really need to bill that on a regular basis, and if you're doing healthcare or something like that, then you need to bill it. That's going to be your decision. I'm not going to tell you what to do. You know that if you bill it and you get paid, it's going to be income. If you save it in your cash base and you bill it later, it's income next year. But if you get audited, I think auditors will look to see if it's reasonable for what you billed at year end. So just keep that in mind, talk to your accountant. But let's say that you need to buy some equipment. Well, buying it in December doesn't help you much unless we can write the whole thing off.
Mhm.
If we can't, you're only going to get a small amount of depreciation, and it's not going to make a big difference this year. But if next year you tell me your income's going to be a lot higher, I'd say, you know, if you don't get the write-off, maybe we want to buy it next year and get a full year depreciation on that thing, or get the full write-off next year. I don't know. Retirement account, depending on the type of entity, an S corp versus an individual or partnership, you may have options for how much you can put into your retirement account if you have a plan for your employees or through your business. I have a S corp owner only on payroll, and he has a 401k running through that business, and that allows him to put a lot more away than the little $6,000 or $6,500 you get to put in an IRA. So we might recommend putting more in a retirement account. We might look at your accounts payable and say, you know, is it reasonable? Do we need to do something with that at year end? Do you need to, if you're a cash-based business and you pay these bills, then it comes off the bottom line. If you're not a cash-based business, it's still going to be in there as an expense. So you might want to think about that. I'm going to jump to the next page, and then maybe Jessica has a few things. So, yeah, anything else on just general tax planning you can think of?
I was just thinking of examples. The ones that I see a lot are mostly farms. They're not required to do estimates. So typically come October and November, they try to get in a little early. I mean, because their income fluctuates from year to year being farms, so they come in early to do tax planning and see if they can purchase equipment that we can take, you know, Section 179 on, and write it all off for the whole year and, you know, save them money. So.
And some businesses will do the same.
Mhm.
So it's important that you're looking at that right now. Section 179 is an IRS tax code section that allows you to write off 100% in the year that you purchase certain things. Equipment and vehicles, real estate, but it can't be, it has to be non-residential. So if you're running a rent, if you have a lot of houses you're renting or apartments, we're not going to take 179 on that. But you can take the loss in the year that you do the work. So one of the examples, let's say you can take a loss on a security system, and you want to put one in, and it's December, and you got a negative bottom line, but you said, you know, I have a place that builds these big trailers for racing cars, and when they sell a trailer, it's $1 million, and it might take 2 years to build, and they sold 3 this year, which means they're going to have a lot of income this year, and next year they're going to have none. So what do I want to do? I want to take all that write-off this year, If they had a loss and we took it, we can carry forward, but I really want to write it off this year. And if they told me last December that they wanted to put in a security system and, you know, they just got to set it up and it's December, I'd say, well, why don't we put it in January and you pay for it next year and we'll take it when you're going to have this $3 million worth of sales. Okay, so that's the kind of thing we look at. Now, that's kind of an exaggeration for most of you, but maybe it gets you to understand. We do that even for the smallest businesses.
Mm-hmm.
The place I was at yesterday, again, looking at, I asked, did you buy any equipment? Oh, we bought a few computers. We got to buy some more. Should we buy them this year? Yeah, buy them this year. You got a big bottom line right now. You might think about putting more money in the 401k for employees. You know, your profit share. So those are things that we work with. This bonus depreciation, it was new last year, I think, right? With the useful life of 20 years and under.
Yeah.
We don't know what, we're going to be doing tax training in a couple of weeks for 2 days, and we're anxious to learn what any new rules are. So, you know, stay on top of this with your accountant. And there's this qualified improvement property that's been around now a couple of years, and that's for interior of non-residential buildings. Okay, so qualified business income deduction is something we look at. I'm not going to get into how that gets calculated. If you qualify as a qualified business, then you get to take this deduction, and if we know that that's the case, then we're going to look at how you can maximize the most of getting that deduction. Farmers and manufacturers will take advantage of any New York State credits that are available. But the thing we ask, and we ask it now and at the beginning of the year, is your entity the right entity for you? And that's because some of these things are allowed for certain types of entities and some may not. But again, that's a discussion probably for another session. Okay. Tim's favorite, I think. Hold on a second, we're just getting reorganized here. All right. The CARES Act, Tim asked us to touch upon this. So the stimulus checks, I mean, we keep hearing about a third check, I'm not counting on it. One of the things to look out for this year, should have looked out for it last year, is people gave us their data, and when I asked, did you get a stimulus check? A lot of times the answer was, I don't know. Did you get $1,200 or $600? You know, if you're married, I don't know. So what did we do? If they couldn't show us whether they got it or not, we made the assumption that they didn't get it. And then that meant that when we calculated your taxes, you were going to get that as part of your refund. I have a situation where somebody, I don't think we got it. So they were supposed to get an extra, let's say, $1,800 back. Well, they got money back less the $1,800, and they're mad at me because I told them they would get more. But the reason why they got less when we got the IRS letter is they already got the stimulus money. So they can't get it a second time, and they don't understand. And it was very difficult for us to explain because we didn't know how this whole thing was going to work. So if you did get stimulus checks this year, please, please make sure you let your accountant know exactly what you got. Try to find the documentation. And if you got these checks that didn't tell you what they're for, I hope you made a copy of them or some documentation, or go back through your bank statements and find out what they are, because this is really important.
Yeah, I had a client who, it's a split household situation, so, every other year she's like, one child, and she said that she didn't think she got the stimulus, so she wasn't sure. So by the time we got her return done, which it was on extension, I think I got it done in March, actually, I got it through for March. By the time they figured out whether or not she deserved the stimulus and that she did get it, it wasn't until August that she ended up getting her refund. Because they're just trying to sort those things out, making sure people don't get, you know, double the money. So you should really keep track, because it could slow down your refund if you do get one. So.
Yeah, and the whole thing with unemployment, for people who filed their returns prior to the decision to waive unemployment for federal, I have a client who got her money last week. I have a student who should be getting back $4,000 and she hasn't seen her money yet. So you don't want to have the IRS owe you money. You'd rather, if you're in a better situation if you owe them right now. I think they could have a couple million returns sitting in trailers from 19 and 20, and it could be more than that. I can't remember the number. So good luck if you're waiting on them, and don't try to call because the numbers don't work. And if you ask us to call, then we need all kinds of paperwork so we can talk to them, and we might sit on the phone for hours to not get an answer. So it's pretty sad right now. So let's make your returns as accurate as we can so we don't have to deal with the IRS throughout the year. New York State also, and there's been letters going out of New York State, I think it is, telling people they owe money, and then we looked at it and they've already paid that, okay? So they already got it, they knew they owed at the end of the year, they paid the money, and now they're getting notices saying they haven't paid, because they haven't matched anything up. So just keep all your documentation and make sure you give any IRS letters all pages need to come to your account so that they can work with you on that. Because there's different information on those pages needed for responding. The other thing, this child tax credit, the advanced child tax credit, I have somebody who really needs that tax credit. And he called me and said, I think this is the smartest person I have. He said, I think I'm gonna have a problem. He goes, I'm getting the child tax credit, but I'm putting it in a savings account because I think I'm gonna need that money at year end. And I said, you're right, because this guy makes very little money, has 6 kids, and is very dedicated to donating money to his church. So he has very little money to live on, and that tax credit he gets at the end of the year helps him get through the next year. Fortunately, he was smart enough to put it away, because when you file your return this year, if you're getting child tax credits and you were getting them all year, don't expect to see that come off your return. So you're going to owe whatever tax with a credit is now going to be owed. So last year, if you got $1,000 back in child tax credit, figure out you're going to owe $1,000 more this year because you already got the money. Okay? It's not coming off the return this year. And for people like Jessica mentioned, where one year they claim 1 child, the next year 2, the credit could be calculated wrong. I have somebody like that. I think the wife is getting all the credit right now, and the husband next year will claim the extra child, and they're not going to be able to claim it on their return. The credit already came for those kids. So we don't do both returns. That's going to get very interesting.
Yeah, I actually recommended people to, in those situations, to opt out of receiving the credit, just so it's done at tax time rather than having to owe if you don't deserve it that year.
Right, and if it comes around again and you can opt out, or at any time you can opt out, I would recommend doing that for everybody, unless you can afford to pay the extra amount if you owe. IRA distributions, there was a year where they gave you a break, and now there is no break, so you are going to have to take the distribution. And if you're 70 and a half, if you are taking the distribution, just make sure that you account for it when you do your, when you're thinking about what you might owe for taxes. If you're not 70 and a half and you're in that age group between 59 and 70, or 72 and a half, I'm sorry, think about rolling some of your IRA money to a Roth, if you have a Roth. In New York State, the first $20,000 of pension or retirement money is not taxable. So I have people who are rolling $20,000 out of their IRA to their Roth. They pay no New York State tax. They do pay federal tax, but they're in a slowdown period where they're working less, and so they can afford some tax on that. Don't take 20 out of your IRA and pay tax. Put the 20 into the Roth, then pay your tax, because Roths are earning tax-free right now. So that's a benefit you might not think about. If you're younger and you're putting money into a 401k and somebody offers a Roth, we're highly suggesting, but talk to your investment person, that at least split some of that money and put money into a Roth because it earns tax-free. We're also hearing rumblings from the administration that there may be a consideration of taxing unearned capital gains. That's going to get very interesting if they do that, because if they tax it at year end and you have a big unearned gain because the market went up at year end, you get taxed, the next year it goes down. Are they going to give you the money back? Or if it goes up again, are you going to get taxed? And what happens when you take the money out? You get taxed. So I think about where it's best to put money, work with your investment person. We work closely with them. All right, employee retention credit. If you got some of that, great. There are rules as to what you can write off and what you can't. Same with payroll protection, that was the PPP or the EIDL, or any county grants or shuttered venues. You had to make sure that if you took payroll under one of those, you may not be able to double dip. So make sure that you know where you're at with all of those. Some of them, if they're forgiven, are not taxable income, so you need to know that. If you did your PPP, I think we're nearing deadlines for filing for forgiveness.
Yeah.
And the employee retention credit, if you haven't filed, I think you can still amend your employer tax returns to get the employee retention credit. So talk to your payroll company and your accountant about doing that.
Yeah, I think they extended it through December 31st of this year, so the conversation you need to have now if you think you're eligible.
Yep, and you can go back. I think the Monroe County grants that they were offering ended on the 31st. I think there's still money in the shuttered venues, but I don't know. That might have ended too.
I think the most important thing about these, different credits and forgiveness for these programs and grants is that you can't double dip on expenses. So one of the restaurants I work with, I just have spreadsheets set up that show which invoices I applied to which, like I have it split for the PPP loan, the grants, because you have to provide, like when you want forgiveness or even when you apply for these grants, you have to show, what invoices or payroll that you're going to be using for this, and you can't double dip, from one to the other. So we've set up spreadsheets, that list out which invoices we use for which forgiveness or which grant, and which check numbers. So if they ever come, I imagine at some point they're probably going to audit these.
Yeah, maybe.
We still have some issues around clarification on the W-9 1099. Patty asks, if an independent contractor is an LLC, does that mean we do not need a W-9 or 1099?
Give them a W-9, see what they check. If they check the box that they're a corporation, then you probably don't, but be safe.
Yeah.
So give them a W-9 and have them fill it out. And if they check corporation, then put that thing in your file. If it turns out that that's not what they are, you can say, look, they checked corporation, I did not issue a 1099. When in doubt, just give them a W-9.
Mm-hmm.
So,
Yeah,
so individuals or / sole proprietors need a 1099, but corporations do not.
Well, I have an individual who's a sole owner of an S corp. They don't need one. So
Okay, so
if you don't know that, he doesn't use the word. He doesn't use the word Inc. in his name.
Right,
So
but if
I
you're
don't
a
know
sole
it.
proprietor, if you just have a DBA, do you need a 1099?
If you received 600 or more from somebody, they should be giving you a 1099. If they don't, it's not on you, but you still need to report the income. So it's on the person who's contracting with you to request that information and issue a 1099. If they do not issue you one, it's okay, just make sure you report all the income that you receive. On the other side, make sure that you're giving everybody a 1099 so you don't get fined. So that's, you give a W-9 to your vendors to get proof that they are or are not eligible for this 1099.
Yeah, on the W-9, they'll check, like, they'll fill out the top is like their information, you know, name, their DBA, address, things like that. And then below that are a few boxes of, you know, what type of entity are you? So there will be like a sole proprietor or, you know, DBA, S Corp, C Corp. And that's the boxes that you need to, like, check and see which ones they actually checked off to make sure if they are a corp or not, so.
Okay? If you still have questions, either call your accountant or give us a call. We'll try to help you with that. Okay, other CARES Act things. I mentioned in 2020, you didn't have to take a required minimum distribution from your retirement account, but we're not hearing, you got to take it this year. And,
Well, as far as we know.
yeah, so, yeah. Again, one of the things you can do is if you're giving money to charity and the money is sent directly from your retirement account, then that counts as a distribution and you get that, you don't have to pay tax on that. Because right now, you can't really do much with write-offs for donations. And that's the last line there. You know, last year you got $300, whether you were single or married, for a charitable deduction. This year it's going to be $600 if you're married. But that's nothing compared to what some of my retirees were doing with their itemized deductions on Schedule A. They were giving a lot more than that, and a lot of them have stopped. Some of them, though, I've encouraged to have the money come right out of their required minimum distribution. It has to go from the investment company to the not-for-profit, and you don't pay tax on that. So if you have to take $50,000 out of your or $100,000 out of your retirement, and you're giving away 50 of it, you're only going to pay tax on 50. And that's a lot better, even if you do itemize. A lot of times I have people do that. And then this net operating loss was allowed to carry back. We don't know the rules on that.
Yeah, I haven't heard anything about that
So we're
yet.
not, that'll, you know, if you had a net operating loss from any of those years, you were able to carry back to those years. That meant we had to amend returns, or carry back to a prior year, but I don't know how many of those we did anyway, because you can carry forward too, so.
Yeah.
Farms probably
I think there was a
typically.
handful, but
Yeah.
I didn't even work directly
Yeah.
on it.
So if you had a situation where you had a big profit somewhere and you wanted to carry back, but that rule went away, you may be able to now, you may have been able to carry back. Again, we won't know till probably in next, maybe even January what the rules are. Okay. So, let's see, payroll protection, we talked a bit about this, so you could, you know, basically you could use this money for payroll, rent, utilities, and like Jessica said, just make sure that you know what money you're using for which of the loans. Corps were based on prior year payroll, self-employed was based on prior year profit. And here's some notes on this, so I'm thinking that if you guys want to take a look at this, I mean, we're not experts on this. We have some staff in our office who have been working on this for our clients. We just have to make sure we can gather the information. But if you do have any questions on these, you know, talk to your accountant or give me a call, and if we can help, we'll talk to you about that. Be careful, you got one shot, and make sure you are on top of filing for forgiveness. You had 10 months from the end of your covered period. I don't know if that's changed. You added a year? I don't know.
I don't know if it changed or not. I don't think I heard that it did, but I
I
would.
think 10 months from your covered period to apply for forgiveness, otherwise it's a loan. Are they taxable? The forgivable ones? No. And I think we're done with covered periods for that.
Yeah, they should be. I think the last ones were done in like, what, February?
Yeah,
So,
okay. Other stimulus, the payroll credits we talked about, you can't mix the sick leave and child care with the employer tax credit. Again, that's where we let our payroll experts deal with that. They do expire 12/31, so check with your tax accountant and your payroll specialist on that. And there's our contact information. So I think what we'll do now is see if there's any other questions. Sounds like maybe not.
Any other
Jennifer,
questions for
Tim?
our speakers? Just a reminder, we will be emailing you the PowerPoint of their presentation, and we'll also be sending you the link to the presentation on our YouTube channel. So you should expect that in your email in the next couple of days. Otherwise, questions?
Any
Last-
feedback, anything you want to see for the next,
It says, any other particular things you would call out for single person S Corps to consider at the end of the year?
single, yes, definitely. Do you have a 401k? And if you don't, maybe a little late to get that going, but think about it for the new year.
Another question is, if you're audited and enough receipts were not sent to the IRS, will they tell you and give you another chance? In my experience, yes, but I don't know. What's the standard?
Yeah, can you repeat that question?
Yeah,
If you're audited and you didn't send enough receipts to the IRS, will they tell you and give you another chance to rectify the situation?
yeah, okay. So here's the deal on audit. My preference for audit is to let your accountant handle it. And only because you could say too much. I, as your accountant, or Jessica could say, we don't know. We'll get you that information. You will probably tell them everything and more than they asked and give away other stuff. So, but aside from that, work with whoever the auditor is from the IRS. So contact them, let them know that you have additional receipts. I'll tell you about two horror story audits. One was a good one. One was a farm, small DBA, or not even I don't think he's an LLC. That files a Schedule F on his personal return and has big losses. Our farms usually see big losses. I mean, they buy big equipment, they have a lot of expense. They make their money, unless they're selling to Wegmans and places like that. They make their money when they sell the farm, and they make big money when they sell the farm. The values in the real estate, the equipment, all of that stuff. Big losses in the IRS, but he also worked and made a couple $100,000 in his job, and his wife and him ran the farm, she all week, him on the weekend. So they were thinking he was trying to cheat the IRS because he'd have $40,000 worth of losses a year or so. He came, they did an audit. We told him it would be at our office. He brought all his boxes for the year that he was being audited, all neatly in file folders, everything there. I was able to recognize, they wanted to reconcile his personal bank account cash to the farm cash. And with all those activities, we couldn't count for a little bit less than $2,000. And the auditor couldn't find anything other than they said, well, I still don't believe that he's in business to make a living. And we asked for a meeting with the supervisor. The supervisor came, saw he had a website, saw he had a business plan, and they let it go. But it cost him $4,500 for us to do that audit because of the amount of time it took with the auditor. And it's just terrible what happens. But the guy was organized, it worked well. I have another person who got audited through their prior accountant who made major mistakes on their returns. So we came through and ran the desk audit for them. And she said, I gave you everything. And the pile that she gave me was a terrible mess. So it was her itemized deduction. And I spent the whole day sorting all the documents that she had and could not match anything to her totals. And when I asked her about it, she goes, oh, every year I just give my accountants the sheet. And that year I forgot to change the number. And on top of that, she didn't match anything to what she gave me. So when I went to it was a New York State audit, I just turned over what I had and I admitted that what had happened. But I did find some extra documents and I did contact them and they did take them into consideration. So just a few horror stories about audits, and I hope none of you have to go through that.
All right, last call for questions. Okay, thank you for joining us today, and please join us next month. Do we know, Gina or Tim, what the topic will be? Oh, there is another question. If you guys, if the business is international, but the headquarters is based in New York, I'm not, are you, Amy or Assignee, are you asking about tax implications or? Oh, is the IRS, will they give you more tax breaks?
No. We don't do a lot with international businesses. We have some international clients who live outside of the States. I don't know. I can't answer that. I would suggest that if you are working with, if you have an international business, that's, unless it's Canada, I think that you should look at one of the very large accounting firms, and we could kind of make some recommendations. One that deals with international business, because IRS wants all their money for everything, and I'm sure there are other issues with, you know, the whole thing with
Great.
international business.
Fred, what if I have 2 DBAs? Oh, boy.
Okay, then if you could have, I have somebody who has rental property, they have okay, they got a medical practice that goes on the Schedule C on their personal return, they have rental that goes on the Schedule E on their return, and they actually have 2 rentals. So you can have several. I have another guy who just told me he has rentals and he just started a company, so he's gonna have a Schedule E and he's going to have a Schedule C on his return. And I have others that may have 2 or 3 Schedule Cs. So if they're all separate businesses, you have to have a separate schedule for each one.
Yeah, and keep everything separate. Don't use the same bank account
Good point.
for all entities. It
Credit
creates a
card.
disaster for accountants.
Credit cards, everything. Do not mix the 2.
Mm-hmm.
And if you buy something for the business, but you're gonna share it between the 2, if it's something you can actually physically split, then put half in, put the amount that goes in one business in one, put the other in the other. Make sure that the business business A pays business B for their share of the stuff. Or you've got to do from between the businesses. And you better make sure that that thing balances at year end, because there's another headache when it gets to us and they don't balance, and we've got to balance them. You can count on a few days worth of work on our part to figure out how to get them to balance.
Yep, I have a client who keeps an S Corp, 2 S Corps in the same QuickBooks file, so we have to extract all the data. Takes me about a day and a half just to extract the data before I can even start looking at if it's correct. He gets quite the bill every year, so.
I have a client who has several venues, and they use the same credit card for all the venues. They use the same software, not QuickBooks, but their venue software. They also collect payments through an entity called Stripe, through one of the entities, and then I have to go and allocate that to the other entity, and a due from, and a payback, and they actually split staff sometimes, and it's a mess. And so instead of spending maybe a few hours when I pick it up to work on it, I'm actually doing the books for this place. It's pretty complicated. I pretty much spend about 8 hours for each entity a week, and I think that could be cut down to 8 hours total for each if they had just separated those out. But they're saving money that way on the other end, and I don't think that what they're saving in the software and the fees are what we're charging them. So just keep that in mind, but keep them separate. If you can pull them together as one entity, that would be great. But if you can't, then keep them separate. Treat them as separate entities boxes separate for any files, or electronic files separate QuickBooks, everything.
Okay, great. Again, thanks everyone for joining us, and we hope to see you next month. If sorry,
Jennifer?
yeah.
Yeah, so Tim Bach from SBDC. Thank you, Linda. Thank you, Jessica, for a presentation. They're actually presenting next month on starting your year off right for small business. So some pointers to getting your business off to a good start for the next year. If you'd like to reach us at the Small Business Development Center, you could either call 395-8410 or our website, www.nysbdc.org, to set up an appointment. Click the upper right corner, make an appointment. Our director, Jan Pazanchen, is on the call. Would you like to say anything, Jan?
Hello, everybody. Sorry, I got onto the meeting a little late. I was tied up with the SBA this morning. I appreciate everybody's attendance, and I hope everybody got some good information today. I want to remind everybody that our services are provided to small businesses in any shape and size, and that includes startups, existing businesses, even those that have been around for a while. Our services are provided at the right price, at no cost, and our services are confidential. You are assigned to work with a business advisor one-on-one. Right now, we're doing everything virtually, not getting people to come to the office. And quite honestly, we've not gotten too many requests since this whole pandemic thing started, but everything seems to be working quite well using Zoom or Microsoft Teams, and certainly phone calls to encourage everyone to consider coming to see us. We're not accountants or tax advisors. That's why we have presenters like Linda and Jessica on board to do these types of programs. But we are very good at helping people write business plans, and also helping people get funding if they are in a position and qualify to secure loans. So looking forward to talking with everyone that's been on the program today, and hopefully we'll see everybody next month and get a good start to the new year as far as your planning goes.
Thank you.